Hello everyone. On behalf of Vidya Institute, I welcome you in the lecture series on investment. The very first lecture we are beginning with basics of investment. Let's understand the concept of investment. Is that something that is generated on the trees that पैसे क्या पेड़ पर उगते हैं? बिल्कुल नहीं, ऐसा नहीं होता. So let's understand what is the money or income. Income is nothing but the money which we earn by any source is partly saved and partly spent on our needs and wants. The part of it saved may be used for further needs. Instead of keeping these savings idle, we may like to use it in some way which would help us earn money in the future in the form of interest and returns. So let's understand one thing clear. Here we are talking about income partly saved and partly spent. Make sure you save first rather than spending first. Having understood this, that savings are used for further or the future needs and wants. So is those sufficient? Why we need to have investments then? Let's have an answer. The very first reason is earn an income on our idle resources. Suppose we have a bag full of money and kept as it is, or the money which is kept in house locker. Such money will not earn any type of interest. Hence, it will not grow, rather it will diminish because of the inflation. Hence, we need to invest from our savings. The very second reason I will give you that to generate an income for a goal in our life. We always save for certain goals. At the time of completion, at the time of meeting with the goal, it is understood that money which is saved for the same may be insufficient. The investment will help you out to get more money at the mitigation. Third reason, we make the provision for an undecided future. This pandemic has taught us that how crucial, how bitter days can be, and for such rainy days we should have a provision for a very big cushion for our daily needs and wants, and investments can help you out in this regard. The last but not the least, to earn above the inflation of the economy. As I earlier said, the money which is stored in our cupboard diminishes its value because of the inflation. So, if you want to beat an inflation, you need to invest. Here, we have understood why we should invest. The next question comes in our mind is when to invest. When we can draw a line, this is a saving and this is an investment. So, let's have an answer. The very first thing, you should start investing from the very early time. If you have missed that train, no matter, today onwards, if you make a steer, disciplined manner of investments, you may succeed. Always remember, investments are done for long-term goal. Now, what is long-term? Long-term can be something which is beyond 3 years. So, understanding that all investments should be done at least for 3 years and not for the short gains. And is it sufficient if you do only once? No, it has to be done regularly. It cannot be done only once or only twice in a year. It has to be done on a disciplined manner on particular intervals in the life. Having understood this, let's proceed ahead with the type of assets that we would like to understand what is physical and financial assets. If you are buying real estate, that is a house, or jewelry of gold, silver, and any other commodities like copper, can be considered as physical asset. The physical asset can be considered the expensive paintings, expensive artifacts. On the other hand, the financial assets like fixed deposits with bank, public provident funds, shares, bonds, insurance, and other investments. Having understood this, we will proceed to the certain jargons that will come across our lecture series. The very first thing, what do we mean by share? So, share is each company's capital is divided into small denomination, which is called share. In simple terms, we can say share is the share in the share capital of the company. You will be the owner of such company, and you will be called as shareholder. The next jargon we have, stock exchange. It is a body of individuals regulating and controlling the securities. The jurisdiction may vary from region to region. Third is debentures or debt instruments. This is a contract between two parties regarding rate, time period, and repayment, etc. In India, the term bond is also considered for debt instruments. Let's move to the next, which is derivatives. It is a product whose value is determined from the value of one or more basic variables called underlying assets. This underlying asset could be equity, could be index, could be forex, etc. Next jargon we have mutual fund. This is a body registered with SEBI that pools money from the public and invests in different schemes across the sectors. This can be considered as financial intermediary and is beneficial for those who lack knowledge about the market. Third, index. This is a method to show how a specified portfolio of shares are moving to show market trends. The index help us to understand the average price movement. Next comes a depository. This is like bank wherein the deposits are securities in very electronic manner. Last but not the least, dematerialization. This is the process of physical certificates are issued and converted into securities in electronic form. This is credited in the investor's account with his depository participant. Okay, having understood these jargons, let's move ahead with type of investment. We have understood we have to do investment in financial assets. But whether it would be a short term or long term, let's understand. For short term, we have cash in hand. It could be cash in savings account, or it could be cash in fixed deposits. All three are considered on very short term because these words are as good as savings which you have made and do not hold as it is for more than 3 years. On the other hand, we have long-term investments such as post office savings. It is a low-risk instrument with 8% interest. Maturity period is 6 years and premature withdrawal is also allowed with certain deduction. This is another good source to have a long-term investment. After that, we have very famous PPF, That means Public Provident Fund. Its maturity is after 15 years with 8% interest rate. Interest earned is tax-free and withdrawal is permissible after 7 years up to 50% only. Okay, it comes with certain perks. Okay, let's see the third one, which is a company FD or company fixed deposit. Borrowings are free. Borrowings are at the fixed interest rate, can be paid monthly, quarterly, annually, etc. Interest rate varies between 6 to 9%. The next instrument we have, that is bonds. We have seen the bonds are debt instruments. They can be less or more than 1 year, has a main purpose of raising fund, and a bond is paid its maturity date. Next comes to the mutual funds. Mutual funds raised from the public by an intermediary, beneficial for those who lack knowledge about the market, and mutual funds mutual fund units can be redeemed at net asset value. We will talk about this in detailed manner in consecutive lectures. Now, when I am investing, are there certain warnings that I should follow? Yes. Any security measures for my money? Yes. Let's understand. First, receive written document explaining the investment. Second, read and understand such document. This is very, very important to read the document. Without that, you should not purchase certain investments. Always verify the legitimacy of the document. Whether it is fake or real, we need to check it from the agent and other sources too. Fourth, find the costs and benefits associated. Sometimes cost is huge and benefits are limited. So please understand all the T and C applicable things in the offer document. Fifth, assess the risk and return profile. Please always make sure that you choose a certain policy or certain scheme which is suitable for you and not for the seller. Understand the liquidity and safety aspect. Make sure you have an ample of liquidity in the market. Decide if appropriate for your goal or not. Compare with options available in the market. Then examine with the previous market-made investments. 10th, we have deal only through authorized personnel. 11th is seek clarification about the intermediaries and investments. 12, always explore new options available. Thanks a lot. I hope you enjoyed this video. Do you have any questions? Then please write us. assess.vidya, that is assess, then please write us assess.vi.india@gmail.com. Thank you.